Great. Okay, so we'll make a beginning. Hello, everyone. My name's Andrew Harrop. I'm the General Secretary of the Fabian Society, and it's a pleasure to be hosting this meeting, which is organised by the Fabians in partnership with Fair by Design, who have also been our partner on the report that we're here to talk about. So it is a piece of work that was published last week called Cost Cutters, which is looking at solutions to the poverty premium and high and unfair costs faced by low-income families. And we're delighted to have a group of people here today to reflect on what the report says and how the next government might want to take forward some of the suggestions inside it. And we also have some time after we've heard the opening remarks from our panel members for question and answer from all of you online. I should say it's a great shame we're not meeting face to face. This was originally going to be an in-person meeting, but as I'm sure many of you know, there are widespread rail strikes in the southeast of England today. So we decided to make this an online meeting, which sort of has a bit of a sort of back to the future feel, like we're back to the heyday of the pandemic. But of course, it does have the advantage that we've got lots of you from a wider geographic range than if we were meeting in London. Just before I start, also want to thank Barra Cadbury, who were the funder for this piece of work. So it's been a really great sort of three-way relationship on the project. So we're going to be hearing in a moment from the report author, Ben Cooper, who's a research manager at the Fabian Society. And then we're delighted to be joined by Tulip Siddiq from the Labour Party front bench, who is going to be giving some reflections on tackling the sort of cost of living crisis and financial inclusion. So Tulip's brief covers the financial services, so she'll be sort of addressing that portion of the work, which really covers all essential markets. Then we'll be hearing from Caroline Cawley. Caroline is a member of the End Poverty Edinburgh citizens groups. Then we'll be hearing from Martin Kopak, who is the director of Fair by Design. And finally, we'll be hearing from David Mendes da Costa, who is the policy manager at Citizens Advice, leading on these consumer policy issues. So let us start off with Ben. Over to you to talk to the report.
Thank you, Andy. And I think I want to start with a few of my own thank yous. So thank you to Fair by Design and Barra Cadbury Trust for working in partnership on this project. In particular, thank you to Martin, Camilla, Maria, Frankie, and Emily. And also thank you to everyone at the Fabian Society for their support with this research, especially Luke, yourself, Andy, Iggy, Hannah, Emma, Rory, and Rebecca. So this month, we're likely to see that the inflation rate falls further, but prices will continue to tick upwards. Over the past 2 years, global economic shocks have been the main cause of rapidly rising prices that we've all paid. But in the UK, people have been paying even higher prices because of unfair and exploitative industry practices. And the poverty premium, which we looked at in this report, is the clearest example of this. So new analysis of the latest data shows that those on the lowest incomes pay £444 extra a year because they are poor. Markets for essentials such as energy, water, broadband, food, and financial services are designed to treat low-income families differently and poorly. As a result, higher prices means many of the 14 million people living in poverty today do so because of the poverty premium and market failure. So this report identifies 4 reasons why the poverty premium exists and why markets for essentials fail low-income families. So the first one is that greater choice has not delivered. Both government and regulators have worked to give people more choices and encourage individual responsibility to find a good deal. But this can actually lead to higher prices as better choices and more affordable prices are not available. And that's particularly the case for those on the lowest incomes. Second, fragmented markets have shifted risk onto consumers. So businesses are increasingly able through technology to target prices and provision based on individual risks and characteristics in ways that they may not have been able to do so a decade or two ago. Now, this results in new forms of price discrimination that low-income consumers find it harder to overcome. Third, government and regulators pass the buck. Both regulators and the government should intervene to protect consumers and make markets work, but they don't. Consumers and campaigners, such as Fair by Design, are often passed between department and regulators with no one taking responsibility or action. And that means opportunities to cut costs and protect consumer interests are missed. And finally, consumers lack representation and power. This is particularly true for those on the lowest incomes. Those on the lowest incomes are not in the room when decisions are made. Policymakers and regulators often do not understand the lives of people who are living in poverty or on a low income. And compared to businesses, consumer representatives lack resource and staffing to ensure that their voice is heard. So our report, Cost Cutters, sets out a series of recommendations to cut the cost of living for low-income families by tackling the poverty premium and making markets work better. So what should the next government do? Well, firstly, it should establish a consumer-focused cabinet committee at the heart of government to share information and develop coordinated interventions across all essential markets. By bringing together government departments, regulators, consumer champions, charities, and businesses, the committee would guarantee consumer representation and that the voice of consumers are heard at the heart of government. Second, the next government should announce a comprehensive cost-cutting plan in the next King's Speech to support regulators to tackle the poverty premium and help families afford essentials. We estimate that this would save the average low-income family nearly £220 per year. And the final report has a long list of recommendations of what could be in that plan, but I'm not going to go through them all. I'm just going to highlight three. Firstly, banning energy companies from charging more if they pay on receipt of bill for gas and electricity rather than pay by direct debit. Prevent insurance companies from charging more to those who pay monthly for car and home insurance, and banning price rises within the fixed term of mobile and broadband contracts. The third set of recommendations we set out in the report is to reform social tariffs through a step-by-step process. Now, we set out short and long-term actions, but by the end of the process, we say that there should be an energy social tariff applying a 20% discount to bills, saving families over £340 a year. A water social tariff capping bills at 5% of household income. A broadband social tariff that is an industry minimum standard of connectivity available for all those who are entitled. And how would we decide who is entitled? Well, it should be based on means-tested benefit, disability benefit, and carers allowance. And crucially, but at the end of the process, all social tariffs should be automatically applied to bills. That means no marketing, no application process needed. The fourth set of recommendations is better and more inclusive financial services for low-income families to build long-term resilience. We set out in the report that that means a national financial inclusion strategy. It also means the introduction of new flexible ways to pay for essentials at zero extra cost. It means expanded access to affordable credit through credit unions and other providers, and affordable insurance to all low-income individuals. And finally, we think that the next government should improve how regulators operate and advocate for the interests of consumers. Now, this group of recommendations is about rebalancing representation, recognizing that the success and legitimacy of markets depend on consumers. And I think that's incredibly critical to recognize at a time when major decisions are being made by government and regulators to enable markets to deal with serious challenges such as decarbonisation and the transition to net zero. So we propose, again, a long list of recommendations, but I just want to highlight a few. That the government should appoint consumer representatives to make up a third of the board of every essential market regulator. Requires regulators to consult with a new consumer committee made up of people with lived experience of poverty and consumer representatives when deciding major policy intervention. The government should also give all essential market regulators powers to enforce the Equality Act, including socio-economic inequality, and finally, introduce new consumer duties backed up by statutory consumer advocates, especially in the sectors where they don't currently exist: food, telecommunication, and financial services. So in total, and there is a lot of recommendations, but they're about ensuring that markets work in the interest of every household. And it's ultimately that by reshaping how essential markets operate, we can tackle the poverty premium and cut the cost of living. Thank you very much.
And thank you. You've covered a huge amount of ground in a short space of time. I'm sure if you didn't digest all of that, if you click on the Fabian's website, you'll see the report on the front page, so you can get into some of the detail there. I'm delighted to now turn to Tulip. Ben just talked about a financial inclusion strategy as one of the key recommendations in the report. And I know that Labour's been thinking about a financial inclusion strategy. So over to you, Tulip, on the role of financial services in supporting low-income consumers.
Thank you, Andrew, and well done to Ben and everyone who's worked on this very important report. And Ben, I can assure you that I will be looking at the recommendations, especially on financial services regulation, very closely in the coming weeks as we prepare for our plans potentially in government. And you mentioned a few times about the role of legislators and the role of people in government. And it's something that we will take very seriously if we are lucky enough to win the next election, whenever it may be. So that's the question. I don't know when it will be. But I will tell you that everyone in the Labour Party, especially Rachel Reeves and I, we believe that everyone should have access to the financial services that they need. So whether that's saving schemes, whether that's insurance, regardless of their income or circumstances, it's a right. That's what they should have access to. But often, as we've seen, and as your report demonstrates, it's the most vulnerable in our society who are unable to afford it or denied access to financial products or the services that they so desperately need. And I will take some shocking examples from the report that stood out for me, but I can also tell you, as a constituency MP for Hampstead and Kilburn, I've seen firsthand people coming to my surgery and talking about not being able to access financial services that they need. Some of the things that I took from your report is that the poorest households who are facing an extra £335 a year in car insurance premiums, it's something that's been talked about quite a lot, but nothing's been done about it. About the extra £201 for high cross credit, which I think is a shocking failure of the system. The fact that 54% of low-income households are facing higher home contents insurance because they live in a deprived area. So it's a double whammy because you're more likely to be targeted, but then you also have to pay more. So if I am fortunate enough to serve in a future Labour government, and we're not complacent about it, if we do get to that position, we want to tackle these poverty premiums in financial services. It's going to be a key priority for the Treasury team, especially for me as City Minister. And you will be aware that the last Labour government, which does feel like a long time ago, did champion financial inclusion. We oversaw the biggest reduction in the number of people without a bank account. We introduced legislation for auto-enrollment in workplace pensions, and we set up a free money advice service to provide guidance and support for those who need it. And once again, if we do win the election, we want to deliver bold reform. And that's why in the Labour Party, we have already committed to a national financial inclusion strategy to drive forward the changes that we think are needed to boost the resilience of British people. We want to make sure that the financial services system is working, not just for a few, but for the poorest, and we want to empower better financial decision making. The strategy will be designed and implemented by a committee led by the Treasury. We will have representations from across government, from regulators, from civil society, and from industry as well. And tackling the poverty premium in insurance markets, such as cars, in buildings, in contents insurance, as well as credit markets, is going to be a key priority for this committee that I've just mentioned. And turning to digital inclusion, we feel it's a critical enabler for financial inclusion, and the committee will consider how government and industry can support the 3.9 million people who are digitally excluded as well. As well as our plans on financial inclusion, some of which I've talked about, we're also committed to urgently regulating buy now, pay later products because we want to protect millions of consumers from getting ripped off. Again, I go back to my local constituency links where in Kilburn, there's on one side, there's gambling shops, and the other side, there's payday lenders and loan sharks. So I've really seen firsthand constituents coming in and talking about how they've struggled when they've used unsecured credit. The other thing that we are looking at is giving the FCA the powers that it needs to protect in-person banking services, because we want to accelerate the rollout of hundreds of banking hubs. We're currently exploring the role that banking hubs could play in tackling financial exclusion more broadly by having committed staff to support people to bank online and access other digital services, as well as signposting people in financial stress to appropriate debt advice and other money services. So I hope it makes it clear to you that financial inclusion will be at the heart of our strategy for the economy if we do win the next election. You've probably heard our Shadow Chancellor, Rachel Reeves, setting out Labour's economic agenda, which she calls Securenomics. For households, Securenomics means a recognition that people can only plan ahead and can only invest in their future when they have the economic security to do so. And we think workplace savings will be playing a key role in achieving this, in achieving our ambition of having people having the economic security to live their lives properly. And that's why in my financial services review published earlier this year, which many people on this panel and indeed probably in the audience helped me with, we pledged to work with businesses to pilot innovative approaches for encouraging savings, such as Nest Insights Workplace Saving Program. We do recognize that the incredible success of these programs can't simply work on its own. It will require the right support from an active and intelligent state. We have to work closely in partnership with the private sector. And that's why, if we do form the next Labour government, we want to review and tear down the legislative and regulatory barriers to enabling a widespread rollout of innovative savings program. So just to reiterate, Ben, and to reassure you, we have looked at the recommendations in your report. We will be taking them very seriously, and we will be coming back to you for more ideas as we're planning what will happen if we win the next election in the first 100 days of a Labour government. Thanks, Andrew.
Juliet, thanks so much. There's a lot there already, but brilliant to hear that you're in the market for ideas and will be leafing through this report with close attention. Right, well, we're going to have a round of 3 responses now. We're going to turn to Caroline and Caroline's cat, who has been hogging the attention. I couldn't take my eyes off her. So over to you, and brilliant to hear your response as a grassroots activist.
Thank you, and apologies for Dave. He does like the attention. I am a person with lived experience of poverty, and firstly, I do want to look at some of the finance recommendations that have been put forward. So there is always an assumption that everyone has a bank account. Not everyone does, and it isn't always easy to get one, as many banks will make you do a credit score first. And if your credit score isn't good enough, you can't get a bank account. And without a bank account in today's world, you can't do anything. You just can't. You can't pay by direct debit. You will struggle paying your bills just because you don't have the bank account. But there is also a need still for cash. For instance, if you are a pay-as-you-go customer for any of your utilities, in order to top them up, you often need to have cash because shops won't let you do it by card. I think it's something to do with the charges that they incur doing that. And it's getting increasingly difficult to get cash because the cash machines are disappearing at a rate of knots. And if you can't get to a post office during post office times, you can really struggle just accessing your own money. There is also a massive issue around affordable credit. For people in my situation, there isn't affordable credit. As soon as you say you're on benefits, that's it. Banks will completely reject you if you don't have an income of at least £20,000 a year. And then you're stuck with the companies that will charge 35, 40, 45% APR. I saw one credit card that was charging 98% APR. That's just a trap for poor people. It isn't affordable credit in the slightest. But it isn't just financial services that people are paying the poverty premium for. Think about your typical groceries. Somebody who is living day to day on the benefits cannot bulk buy. It is more expensive to buy when you have to buy a pack of 4 toilet roll instead of being able to buy a pack of 18, for instance. You're also often limited by how much you can carry because you sometimes cannot meet the threshold in order to be able to get your groceries delivered. So you can only buy what you can carry. And you can't take advantage of offers such as buy 2, get a third free. If you've only got the money for one, you can only buy one, and that's more expensive per item than if you could actually take part in the offers that are available in the supermarkets. And there's also a massive issue around quality. I talk about this quite a lot, so people may kind of roll their eyes slightly, but there's a famous writer called Sir Terry Pratchett, and one of his characters, Vimes, talks about why he always wears poor quality boots. And the reason he always wears poor quality boots is because he gets a pair of boots and he starts saving up so he can buy the next pair of boots. But by the time his pair of boots has fallen apart, which is very quickly because they're poor quality, he doesn't have enough money to buy a good quality pair of boots that are going to last him for years and years. He only has just enough money to buy the next pair of rubbish boots. And then again, the cycle continues over and over again. So over a 10-year period, instead of being able to buy one pair of boots that maybe cost £100 but lasted for the whole 10 years, you have to spend £30, £40 every year getting a new pair of cheap boots that don't keep your feet dry and don't keep them warm, and they're very uncomfortable. And it's the same, and this, while it's a fictional character, it is very much a universal truth. You cannot afford good quality products that will do what they are supposed to do for very long. And it's not just clothing. If you look at white goods, for instance, you end up with poor quality white goods with today's designs with the built-in obsolescence. You can't repair it when it breaks. You have to buy a new one. So you're constantly having to buy a new white good that just doesn't last as well as one that costs more. But not only that, due to energy efficiency and the cost of running, it's more expensive to run as well. So you end up paying so much more over a period of time just to have poor quality products. And this is something that you can look at from a gendered point of view. So for women, period poverty increased by 9% in 2023. And that's not even taking into account the fact that Scotland offers free period products everywhere. It still went up by 9% in the UK. There is a genuine misunderstanding of how much product that you need over a period of time and how expensive they are, and how it's not just a financial premium, but the fact it's also a dignity premium. How many girls don't go to school because they don't have the right products? How many women have to take time off work because they don't have the right products? And bras. Now, some people get uncomfortable when I start talking about bras, but they're expensive and they are not a luxury item. You need them to help with your posture, to help with pain. If you want to do any kind of exercise, that's another type of bra, but you need it or you can't exercise. If you're a mother and you're nursing, that's another type of bra, and they're expensive. And unless you are a cancer survivor, you have to pay that. But you are supposed to exercise and stay in shape. How can you exercise and stay in shape when you can't afford the basic clothing which you need in order to be able to exercise? And that's something that impacts women slightly more than men, although I am not suggesting that men don't also have additional issues around poverty. And I just wanted to make it clear that the poverty premium, it's not just financial. It's also time consuming. It's really, really time consuming to be poor. It also leads to much, much worse health issues. The health inequality is enormous. It's about a decade between people in poverty and people not in poverty, the life expectancy. And the period of time that a poor person will spend in poor health is significantly longer as well. And as I said, there is also that dignity aspect, not being able to afford the good quality products, not being able to participate in aspects of social life. So for me, that is something that needs to be looked at as well as just the financial aspects. You need to look at the impact on mental health, the impact on physical health, the impact on time, and the impact on dignity, as well as the financial consequences of being in poverty. Thank you.
Brilliant, Caroline. Thank you so much. And now we're going to Martin and Tulip. I know you're going to have to leave a bit early, so give me a wave if you are imminently going to have to leave, and I'll ask a question or two to you. But Martin next.
Thanks very much. So we all know there's only two ways to tackle poverty premium, and that's either increasing incomes or reducing costs. And it's the reducing costs aspects that Fair by Design, part of Barrow Cadbury Trust, concentrates on. It's actually our mission to eliminate the poverty premium, and we work across four main markets: insurance, credit, energy, and how people pay. And we try to integrate lived experience into what we do and the work of others. And thank you so much, Caroline, for coming to share your thoughts today. So for the people we work for and the people we represent, the poorest in society, we have to think about the poverty premium in the great risk transfer. And I know Ben mentioned this. As a society, we've made a decision, a conscious decision, to transfer more and more responsibility to individuals, whether that's saving for a rainy day or for a retirement, accessing insurance or credit if you have an income shock or a life shock, or even accessing payment methods that just don't cost more the poorer you are. Also, the thing around spending, you mentioned this, Caroline, time, spending hours searching for the best deal possible, where often if you're on the lowest income, it's just not possible. And this is because we're told to look to the market for our needs and our family's needs. And that's great if you're the right type of customer. But what happens if the market doesn't want you? What if you're too high a risk? What if you're seen as too costly to serve? You're charged more or simply excluded, with people ending up paying more for insurance simply about where they can afford to live, paying more for essentials because they can't pay for all in one go, bulk buying, paying more for credit because you're too high a risk, and paying more for energy just because you're looking at every penny you've got and you can't afford to pay by direct debit and you have to pay by receipt of bill. You charge more then. So you get the picture. But we have to realize in a competition-driven market, companies naturally design for profit, and fair dues, they're charities. That's what they're supposed to do. Fine. But at the same time, we have to recognize that we've given amoral markets moral decision-making about who gets what and at what price. The checks and balances simply aren't there, not for the least desirable customers, the poorest. However, it doesn't have to be this way, and we can choose to make markets work for everybody and put hundreds of pounds into the pockets of the poorest in the UK today. Often, and I'm saying this because Tulip's here, often without any extra funding at all from the Treasury. We see this report as a real step forward ensuring markets work for everybody. And the systemic issues which Ben is so well put across in the report really highlights that governments and regulators need to work together transparently in partnership with civil society and businesses. It's this lack of joined upness which people like myself have been wrestling with for years, trapped in a black hole of regulators and government departments keep pointing to each other about who holds responsibility, each pointing for the other for direct action. We've been trapped in the longest game of policy ping pong ever known, and I've been playing this game for so long I've got RSI. And I've got a feeling quite a few people in the audience might have developed RSI too. So this report is super timely, especially because of the announcement of the new financial inclusion strategy and a minister-led committee if Labour comes into power. And we are thrilled about this at Fair by Design. We were absolutely jumping for joy when we saw this announced. And I mean, big congratulations, Tulip. and to Emma Hardy MP, and for the wonderful Mark Hudson in Tulip's team, for all the leadership that you've done in getting us to this situation if Labour does come into power. Plus, credit where it's due, and I think everybody on the call needs to know this, is that Tulip, you've been highlighting the poverty premium across everything you've done. So huge thank you for that. Finally, I wanted to pull out one other thing that Ben mentioned, and this is a thing around recognition that a real lack of consumer representation engagement in regulator decision making and consumer policy decision making is really at the root of why we've got so many bad outcomes that we hear about today. As an ex-regulator myself, I can honestly say that the voice of the consumer interest within these types of decision making is absolutely minuscule compared to other players. This needs to change if we want to ensure that everybody's needs are met. All that's left for me to say is well done, Ben, on this report, and I'm really looking forward to further questions and the debate. Thank you.
Brilliant, Martin, and nice and succinct, which means I think I've got time to ask Tulip one question before she goes. Let me ask Tulip maybe about the role of the mutual sector in financial inclusion. You know, what are the opportunities that Labour would like to promote, both on the credit side and the savings side, for mutual players?
Thank you. Thank you. Just to echo what Martin said about Emma Hardy, who's worked really hard on this, and obviously Mark in my office, often you don't see the staff members, but they have been working on this consistently. So thank you for Martin for mentioning that. I think, Andrew, to deliver financial inclusion, we've got to ensure that it's a diverse range of financial services institutions that exist if we really want to serve the most economically vulnerable. And that's why in my financial services review, and I know I keep going on about this, but it really was kind of our wish list of what we want to see if we are in number 11, is our pledge to double the size of the co-op and the mutual financial services sector. It's a huge ambition of ours, but it's something we're wedded to. And Labour MPs such as Mark Hendrick have been working on this for years. But the next Labour government will introduce new requirements on regulators and policymakers to properly consider the needs of mutuals and actively reduce the barriers to their growth. We want to continue the work to modernise the Building Societies Act to level the playing field with the wider sector. We also want to support credit unions to offer more products. And it's impossible to talk about this without talking about strengthening the SME bank referral scheme to support businesses who are securing financing from alternative sources, including co-ops and mutuals. So we are working very closely with the Cooperative Party and the wider co-op and mutual sector, but we've made it very clear about our ambition in the Labour Party. We want to support the sector, so the vital contribution that they're already making to the economy can go further, and we want to drive much needed inclusive growth in every part of the UK. But our pledge is to double the size of the co-op and mutual financial services sector if we do form a Labour government.
Yeah, thanks, Tulip, and thanks so much for your time and support for the project. So as Tulip slips off, we're going to, in a moment, I'm just going to bring in David. But just before I do that, I want to talk about the Q&A, just to explain how we will do it. You've got two options. Thanks, Tulip. You've got two options. You can use the Q&A function and type in a question, or you can raise your hand using the hand raise thing, and I'll bring you in. I'll bring you in on sound when I do that. So just as David's speaking, just give some thoughts, some questions, and get typing if you want to use the Q&A function or put your hand up. David, over to you.
Thanks, Andrew, and thanks to Fabians for putting together this very thought-provoking and timely report. Thanks to Ben on that, and thanks to the other panelists for their comments. I'm here from Citizens Advice. A lot of you will know us from our local offices and our provision of kind of debt advice and general advice to people in need. But we also play have quite an important role within advice and advocacy within the consumer landscape as well, which people might not be so familiar with. So we operate the consumer service, which offers advice to 1 million people a year who need help when goods and services go wrong and they need to navigate the often quite complicated consumer rights landscape. And we play a statutory role. We have a statutory responsibility and duty to represent the consumer voice and consumer interests in the energy and the postal markets. So we see every single day what happens when markets don't work and what this means for the people who come to us for help each day. And all of these activities are showing us that right now essential markets simply aren't working for people on low incomes. And the most acute issue that we're seeing, and the kind of clearest sign of this, is around affordability. So quite simply, we're seeing millions of people being priced out of absolutely essential services, marked services like energy, water, access to the internet and digital services, and financial services such as insurance. People are either priced out and are having to cancel or unable to buy these services, or the only way that they can access them is by going into debt. So to pick a couple of examples of what we're seeing on the front line, in 2022, we saw a huge increase in the number of people who are coming to us and needing help because they couldn't afford to put any more money into their prepayment meters. So this is people where literally the lights were about to go out, the heating was about to go off, the fridge was going to turn off. The spike that we saw in 2022, we helped more people with that issue in that year than we had in the 10 years previously combined. And in 2023, last year, we helped even more people than in 2022. And we're seeing this across all markets. So to pick a different market like car insurance, which is also essential, in 2022, we ran a survey of our advisors to ask whether they'd seen people having to cancel car insurance because of pressure from rising bills. At that time, 5% of the people who responded to that survey said, yes, this is something we've seen. We asked again last year, and that number had risen to over 50%. So it's clear that across essential services, we're seeing an acute problem with affordability. And as Martin has said and others have said, these aren't luxuries, these aren't nice to have, these are the absolute essential basics for day-to-day life that people are being priced out of. So I really welcome that this report has got a particular focus looking at social tariffs and looking at how the role that targeted bill support can play in ensuring that essential markets are affordable for everybody. We have a patchwork at the moment, and the report's done a really good job of highlighting a lot of the failings and a lot of the flaws that having this patchwork of support across different markets has led to. And what's needed is a much more comprehensive, coherent, and just strategic approach to looking at bill support, something that looks at what works well in some markets and drawing that across into other markets. But this isn't just about affordability. As the report's kind of clearly shown, time and time again, we see that markets, that people on lower incomes, people in vulnerable circumstances get poorer and in some cases the worst outcomes from markets. The poverty premium, the ethnicity penalty are both examples highlighted in the report of where this happens. And as kind of Caroline and Martin have kind of both highlighted, this comes because relying on profits, relying on the natural incentives that firms have, unfortunately, doesn't necessarily drive good consumer outcomes. And relying on consumers to have to go and be active agents to go out there and find the best possible deal, which might not even exist, when in reality, people are in very, very time constrained. This doesn't seem to be working either. What we need is markets that deliver good outcomes automatically. Maybe the best outcome, you have to go in and do some work to find it, but everyone should have good outcomes when they're engaging in essential markets. And this is fundamentally what regulation should be doing. But at the moment, a lot of regulators aren't focusing on this. They're not necessarily focusing on those consumer outcomes. So it's really interesting to look at, again, what's working well in some markets, what are interesting ideas in some that can be drawn across. And the report does a really interesting job of looking at that. And in particular, highlighting the idea of the consumer duty in financial services, which puts consumer outcomes and consumer interests at the heart of business models. That's something I think we agree should be looked at in other markets, but also the critical importance that having a strong consumer voice can play, because as everyone has said, often the consumer voice is completely missing. from key decisions, key debates, and the insight from lived experience and frontline support is missing from government and regulators when they're looking at the interventions that need to be made in markets. So we really support the suggestion and the idea that statutory consumer advocates, specific funded independent voices sitting within particular markets to represent consumers, and in particular those on low incomes, those in vulnerable circumstances, to make sure their voice is heard. We think where these exist in markets at the moment, they make a huge difference, but they are missing in telco, they're missing in financial services. So we think these are big problems, but the report does a really good job of highlighting some really practical solutions to them. And a lot of the solutions are out there in the world already. There are good things we can learn from social tariffs where they're working well in some markets. We can learn from the best and the ideas that are happening in certain regulators, and we can look at where consumer voices are able to be championed, but to make sure that this works across the piece. So thanks for this report. I think it raises some really important questions and highlights some really practical tools that we can kind of bring to solve them.
David, that's really helpful. So that rounds off our opening contributions. So it is over to all of you to ask some questions. I'm not yet seeing any hands up, so now's the moment to use the hand raise function. I'm assuming it's working, but I have got some participants who have put questions in the chat, in the Q&A. If Joanna is still on the call, Joanna Elson, do you want to, it was originally a question for Tulip, but you can, I'm sure, reframe it to broaden it out to other members of the panel. Is that working? Hi, Joanna. Do you want to go ahead?
Hi, lovely. Thank you very much. First of all, huge.
And for those who don't know you, just introduce yourself, Joanna.
Yes, of course. Sorry. I'm Joanna Elson. I'm newly running a charity called Independent Age, which is focused on poverty and later life. Some of you might know me from previously running an organisation called Money Advice Trust. Anyway, I wanted to first of all congratulate you for the report, which I think is fantastic. It's a really good roundup of some of the key issues that are afflicting people who need the services that not only financial services, but as Caroline has set out, lots of other areas need to be providing. So it's a great report. And my question was for Tulip, but I guess for all of us to reflect on. And as Martin put it really pithily, you know, there are two ways of tackling this, aren't there? You increase people's income or you decrease their costs. So just thinking about the costs, I'm sure we could talk about the income too, but just thinking about the costs, one way of doing that is to ensure that there's a fair price, a fair and affordable price for the products and services that people receive. And so in some areas, there are social tariffs. But our experience at Independent Age and talking to other charities, I think this is true across the piece, is that social tariffs aren't well known about. People don't know how to access them. They don't know what they're entitled to. They don't know whether they'll get the same from one provider as another. So we would love to see the next Labour government putting some welly behind this and having some consistency around the social tariffs that apply, making sure that firms are advertising them, people know where to go for them. And then when people seek help from a charity, for instance, like Citizens Advice, as David was saying, they wouldn't just be learning about how they can improve their income, they'd also be learning about how they can reduce their costs in a very, very straightforward way. That's probably enough to get the point across. Thanks, Andrew.
Joanna, thank you. And again, I'm not seeing any other hand raises, but I have got other Q&A in the chat. Sam from Finance Innovation Lab, do you want to raise your hand and ask the question? Again, it was originally for Tulip, but you can make the same point, I'm sure.
There we go, and I'm unmuted now, so that helps.
Brilliant. Yes, I can hear you. Go ahead.
Well, thank you, Andrew, and thank you, everybody, and in particular, Ben and the Fabian Society and Fair by Design for the report. It's brilliant to read. And Caroline, just always hearing the voices of people with lived experience of financial exclusion just really brings home the work that needs to be done and why we do this work. So thank you too for your contributions. Yes, Andrew, as I said, I've got a question for Tulip. And I guess the best way to summarise it really is just reflecting something that was in the recommendations within the report. So it says, the report says to tackle financial exclusion, partnerships between mainstream financial institutions and purpose-driven providers of affordable credit should be encouraged either through a system of transparent commitments, reporting and rating, or through legislation. So at the Finance Innovation Lab, we're coordinating a really convening a really great coalition of organisations who are calling for a Fair Banking Act for the UK, which is very similar really to the Community Reinvestment Act that exists in the United States. So really a question to Ben, I guess, and possibly to Martin too. What role, what legislation do you see could be the way forward in making sure that affordable credit and access to it is expanded to all those who need it?
I'm going to stop there and go back to the panel because they're both really quite meaty questions. So one on social tariffs and then one on banking and finance. Martin, do you want to start on those, pick up either or both of those?
Sure. Thank you very much, both Joanna and Sam. Nice to see you on the call, or hear you on the call. On the social tariffs, absolutely, Joanna. And yeah, greater consistency across providers. All providers should be providing a social tariff in their relevant market. Yes, that more people should be told about it. But what we would like to see is that people are automatically given their social tariff based on data matching. And not just necessarily with data from the DWP, Department of Work and Pensions, and in terms of benefits, but also for people on low incomes, what we need is better data sharing, or some data sharing even, between HMRC and the DWP and utility companies. Let's design a system which is opt-out rather than opt-in. If you're eligible for it, you should get it automatically. Thank you.
That's great. And Ben, do you want to, you can talk about social tariffs, but particularly do you want to respond to the second question?
Sure. So I think just quickly on social tariffs, I think one of the easiest things in theory that the next Labour government can do is make sure that all social tariffs are on every price comparison site and clearly advertised as a social tariff on what they're there for, because it's too often the case that an individual goes onto a price comparison site and a social tariff isn't clearly advertised. So in the short term, I think that's a really practical thing that a Labour government can do, as well as using, the many income maximisation services, applications, whatever you want to call them, to make sure that, as you mentioned, Joanna, that people are not only told about how they can increase their income, but also cut their costs. In terms of the sort of the Fair Banking Act, you will see in the recommendation that we don't explicitly call for a piece of legislation, and I think that's served a really practical purpose to say that the next Labour government is going to have a lot of legislation to pass, particularly in the short term. So if there is a financial services bill, perhaps it could be attached to that. However, we have tried to, as far as possible, stay clear from using legislation, simply because of that really practical challenge that the next Labour government faces. So we've emphasised the role of regulators and government to encourage partnerships, and whether or not if you can apply greater scrutiny to non-purpose-driven institutions around their partnerships with purpose-driven institutions, we feel that that's probably a better way forward in the short term. And then, of course, if it's not working and legislation is needed to put behind that, I don't think there's a reason why it shouldn't happen. But hopefully, in the short term, soft power and encouragement will be the way forward.
And you wanted to come in, particularly on social tariffs.
Was that to me?
Yes, Caroline, yes. You want to comment on social tariffs, I think.
Yes, my own personal experience of trying to find the social tariff on an individual company's website is often not findable in the menus. You actually have to search, as in you actually to use the search function to find it, and it's not always exactly clear. But I also wanted to say that for those who may have signed up for a contract and have been able to pay it, and then are suddenly not able to pay, but the contract still has time to run on it, I think there needs to be that ability to be able to break the contract to go onto a social tariff without penalty, as you don't know when life events will hit you. And I think that's also important, because you can be doing okay one day and then the next day everything falls off a cliff. And I think that needs to be built into it to make sure that there are no financial penalties for having to leave a contract because your circumstances have changed.
Absolutely, Caroline. And at that point, that's one of the recommendations I think that Ben makes in the report. David, do you want to comment on either finance or social tariffs?
I think just to echo some of the points that have been made, to be honest, I think we completely agree with Martin that what's needed is greater automation. People need to be opted in automatically to social tariffs where possible. But also there is a need for better standardization. At the moment, we just see a total postcode lottery when it comes to social tariffs. So on your broadband, the level of connection that you're going to get, the price you're going to pay will vary depending on where you live and what providers happen to be in your area. And for water, it's literally a postcode lottery. You cannot move to a different water provider. You'd have to move house in order to do that. But the reality is, if you look across different water providers, you see different eligibility criteria and different levels of support offered. And what's needed is just much more consistency between providers to say you'll get the same level of internet, you'll have the same level of eligibility, the same level of generosity. Because at the moment, the system is just really, really, really difficult for people to navigate. So agree, we need greater automation, but we also need simply greater consistency between what's on offer.
Great, thank you. We're going to go to David Southgate now, who asked a question in the Q&A. Just wait for David to come in. Brilliant. And then after that, I'm out of hands up. So I encourage other participants on the call to raise their hand or put something in the Q&A. David, over to you.
Hi, thank you. This is David from Scope Disability Equality Charity. Very much agree with many of the comments that Martin's made around social tariffs and the need for them to be opt out and for people to automatically get enrolled. My question was for Tulip, but I think I'll reframe it for the panel. Couple of things. On the energy social tariff, what do people think needs to happen to actually get there? So what do we need now to try and get that implemented and to get it on the agenda for all of the political parties, especially now that we have a general election coming up? And secondly, I think this would be a question for Ben, but I was interested to see you fallen on 20% as the value for the energy social tariff. I'd be interested in knowing if there was any sort of analysis done on why you landed on that figure and how that figure came about. Thank you. It's a great report, and thank you very much for putting on this great event.
Great. Any other participants want to ask a question? Otherwise, I have one ready. Right, we'll come back. But so the bit of the report that we haven't yet talked about in great detail is the cost-cutting plan, which is a sort of sector by sector, sort of finding the worst abuses are currently underway. And I'm interested to hear from all the participants whether you feel this is something that those industries will sort of get on board with, or is it going to be quite a confrontational process of sort of like taking on some commercial practices that are making a lot of money for the companies involved? Let me start. Who should I start with? I'll start with David this time.
Yeah, well, I'll speak to that question. Yeah, Andrew. I think it's a mix, and I think it's a mix between different sectors. So I think if we were to pick something like insurance and the price difference between paying monthly and paying annually, there's definitely a lot of money in that. I think when the FCA's Director of Insurance made his kind of announcement that this was a tax on the poor, you could see it in the stock price of those companies. So in that sense, you'd imagine there probably would be a degree of reluctance, but also I think there is perhaps a little bit of a sense there that, you know, the jig might be up, in the same way as with personal current accounts when the FCA went after the high costs of unarranged overdrafts. When it actually came to the crunch, there was very little pushback against reducing those costs because everyone realised this one's done for. This practice, everyone sees that it's dreadful and it needs to be sorted out. So I do wonder whether some of the sector might be behind that one. It'll be interesting to see how it plays out. Where I've often seen a lot of pushback though is on telco. Telco is a bit of a wild west, frankly, when you get into it, when you look at the kind of practices that are around. And I think looking at points like people being put on the very best tariff when they come to the end, so that's effectively tackling the loyalty penalty. We've been talking about the loyalty penalty for years, and we still see the same poor practices within broadband, within mobile operators. I think that's a combination, I think, of there's a lot of money in it. The idea of people not switching, that a lot of firms make a lot of money out of that. But also there isn't as strong regulatory scrutiny, and there isn't as much pressure being put on them. So I think that one there'll be more pushback, but I think it's worth pushing for it. But I think it's as much pushing on the regulator to kind of get on with that as I wouldn't imagine industry are going to offer it on a plate.
Great. Caroline, do you want to comment on either of those?
For me, for pushbacks, it's the utility companies. I live in Scotland, so the water issue is very different up here. It's part of our council tax rather than as a separate utility, which actually has its own issues for people in poverty, as council tax benefit doesn't cover it. So everyone has to pay the water and sewerage charge, which is about £5 a week, and if you have to pay that £5 a week. So, and it doesn't go up or down, that's £5. In terms of other utility pushbacks, I know that I've been recently forced onto direct debit for my electric, for instance, and my bills come way down because I'm no longer on pay as you go. And it's just, I find it frankly obscene that they will force you to pay so much extra just because you pay as you go, and how much it's costing just to even have a meter, the daily charge for having it. And my concern is that they've been so unwilling to even up those prices. The idea of actually creating not only evening out those prices, but then giving a discount to people in poor circumstances, that they're just going to complain that it's cutting into their profits too much and that they won't do it. So that's my kind of what I see as an issue. I don't have gas, so I can't really speak to that. I don't know as much about that. But yeah, for me, it's the complaining that, oh, our prices go up, so therefore everyone else's prices have to go up. And I think that would be something that, you know, they'll really push, that other people have to pay more so that poor people can get a discount.
Thanks, Caroline. Martin.
Thank you very much. I was scribbling away some thoughts there. I'm going to piggyback a little bit on what Dave said there around pushback, because Dave mentioned how the insurance environment has changed. If you go back even just 4 years ago, whenever you spoke to an insurer or to the Association of British Insurers, ABI, nothing to see here, or you'd get standard lines and not answering the question constantly, where you couldn't even get to see somebody senior either to talk about this issue. But with careful work over years with our allies, doing a bit of a pincer movement with both different political parties and with the regulator, the Financial Conduct Authority, we've noticed a change, and especially Tulip, fair dues again, Tulip has actually been calling out car insurance is a big poverty premium and something that needs to happen. Now the FCA, the FCA does have a lot of political nous, seeing that there may be a change in government, and seeing a bit more proactiveness from the FCA coming out and saying, actually, there is a poverty premium here. Insurers need to get in your house into your house in order. Not necessarily saying there's going to be direct action right now, but it's that also that soft power, a potential government as interest. The FCA has mentioned this is on our radar. Now you've got the Association of British Insurers actually getting their members to say, right, we need some principles here about what we're doing about it. They're looking at solutions, and they want to be inside the tent for any new types of decisions that might be made about them. But also, their new CEO, Hannah Gurg, has been very positive about financial inclusion. So I think she's been good news here at the ABI. But where I'm getting to here is, I think a lot can be done by just the regulator and political parties, and maybe mostly the government, just indicating where their interests are to do that nudging. I don't think we should underplay that. Thank you.
Thanks. And Ben, to you.
I agree on the sort of the nudging that particularly a new government within the first year has, extraordinary soft power. But we've also indicated that if this plan doesn't happen, then legislative action should be taken. Not a brand new piece of legislation, but in where the relevant legislation's going through the Houses of Parliament, clauses should be attached. Now, I think particularly in the sort of teleco, as someone who comes from Hull and East Yorkshire, where we've only got one teleco company, I didn't quite realise how bad it was for everyone else until I moved to London. I think that is probably where we'll get the biggest pushback, particularly because they've had a regulator that's effectively, supported or been unwilling to take action or even have a conversation, particularly around, for example, reducing prices after a contract has ended. So ending that sort of quite significant price hike after the end of a contract. The other one that could potentially be more difficult is Clubcard. Our recommendation on Clubcard, simply because sort of interventions in the food market have been even rarer than other interventions. But on the energy social tariff, so why 20? The two questions, I suppose the answer to how do we put it on the agenda and why 20% are interlinked, and it's interlinked in the sense of funding and who pays. So we've been very clear in the report that there will be, it's cost neutral. I think that's particularly critical for the Labour Party, of course, and all its fiscal rules. And we've set out in quite significant detail, I think, how it can be funded without a real terms increase on anyone's bills, but a substantial consumer contribution. And also we set out repealing the oil and gas corporation tax break, and that package of reform roughly gets to about £2 billion of spending, which comes to David's question about why 20%. Well, 20% discount with a take up of roughly 75% in the short term gets you to around about £2 billion. So the percentage increase was largely dictated by how much money could be raised in a cost neutral fashion, while obviously considering that means tested disability benefit and carers allowance is the bar for entitlement. But I think the crucial thing about how to put it on the agenda is that we still have high energy prices. Of course, the price cap has gone down, but it is still substantially higher. So we still need to be talking about the issue. But I think particularly when it comes to the Labour Party, there needs to be a clear showing that it can be done without, as I say, a real terms increase on consumer bills and without additional spending or taxation, apart from repealing a tax relief. So that's my advice on how to get it on the political agenda with one political party. Obviously, I can't advise about the other two.
Ben. So we're going to go to a couple more questions. I'm not seeing more, so this will be the last round unless you can get in the next 30 seconds or so. But let me turn to Matt Woodcock. Hi, Matt.
Hi, Andrew. Can you hear me?
Yes, you're great. Carry on.
Great. Yeah, thank you. I mean, just to reiterate what others have said, fantastic report, really enjoyed reading it, and thank you for inviting me today. I work for an organisation called Responsible Finance, and we represent CDFIs, Community Development Finance Institutions within the UK. And I'm struck by a couple of comments today. I mean, we talked about the Fair Banking Act earlier, and that's something that Responsible Finance is supporting. But it strikes me how there are many other things that can be done to ensure that we improve financial inclusion. I'm fairly new to this sector, but I've worked in the civil service in the past, so I really do sympathise with, I think it was Martin's comments about RSI and being passed from government department to government department. I'm glad to say I've stepped over to the other side of the fence now, and I'm hoping to do something about some of these societal injustices. But it strikes me we've got a real cliff edge at the moment. So I'm shocked to see how many people, I think the FCA reported that in 2021, 200,000 people had used illegal moneylenders, and we're seeing by any account around 16 million people who can't get access to fair and affordable credit. And the members that we represent are part of the solution there. But it seems to be, in terms of consumer awareness, there seems to be a cliff edge. I think Caroline mentioned earlier, if you can't obtain credit through mainstream banks, it seems to be a cliff edge for people, and therefore they are going without or resorting to really harmful alternatives. So one of the things that we want to see is a more joined up approach across policymakers, industries, mainstream banks, and so on and so forth, to make sure that consumers are really aware that there are alternatives available. And some of those alternatives might be what you might initially believe are high cost lenders, but they're really not when one looks at the social value that they add and the services that they provide. So a lot of our members, they charge an APR which is reflective of the cost of lending small amounts to people who need money for urgent bills and urgent expenses. But they also support all of the customers who come to them. So they decline 80% of their customers, but they actually provide a service to all of those customers. So, for example, in the last year alone, our members signposted over 600,000 consumers to other sources of help and identified £4,200 each in unclaimed benefits to people who come to them for a loan, but unfortunately they couldn't loan to. So I think I'm just putting a call out and interested in the panel's thoughts on how we can raise awareness for alternatives to mainstream banks in terms of those people who are financially excluded. And I just want to put in a plug for the fact that we are releasing our impact report on the 20th of May, which shows the fantastic work that our members are doing in supporting financial inclusion. And I'm happy to share a link at the end if anyone would like to come to the launch event in London on the 20th of May.
Thank you, Matt. And then we'll go to Rory Ewan, who has a short but very important question.
Hello.
Go ahead, Rory. Hi, Rory. Go ahead.
Yeah, I'm Rory. I work for Policy and Practice. We do one of the benefit calculators on gov.uk, also used by lots of citizens' advice offices, although I'm here as a Fabian member as well. I completely agree around the social tariff take-up in terms of that it can be quite hard, which is why that we work to sort of show that to people who are just checking benefit entitlement as well, to try and maximise the take as much as possible. My question was sort of maybe been answered already, but it was mainly around the sort of main difficulties that you'll see to some of these recommendations. My mind sort of jumped to with the idea of the water social tariff. One of the main issues that water companies have with a single social tariff is this idea of the cross subsidy of how they fund it, and the idea of that some water companies obviously have some richer customers and some have poorer customers, and sort of how you can see that sort of going, as well as sort of the idea of data sharing across government is obviously something that the DWP and HMRC maybe aren't the best at, so that could maybe be another difficulty. And also just one thing in the report I found really interesting, worth highlighting, was just also the geographical inequality of how this differs from region to region, and how maybe the panel sees the best way of tackling this geographical inequality. One thing I don't think has been mentioned, but would be maybe for energy costs, EPC rating of properties and how well built properties are in different areas. So yeah, thank you.
Really interesting. Thank you, Rory. So that's all the questions. So I'm going to ask each of our panelists to respond to those last two questions and also make any concluding remark they want to. So I'll go in reverse order from the start, and that would be starting with David.
Great, thanks. Brilliant questions. On the last one around barriers, well, I think kind of, Rory, you highlighted quite a few. I think when we're looking at kind of social tariffs, it feels like two of the biggest barriers are the one that Caroline also mentioned, which is politically, there's this question around if we want to fund things through cross subsidies, this concern that means that bills will rise for some in order to cover that, and how far that seemed to be a bit toxic. And I think this is something that, frankly, the government just kind of has to grasp the nettle on this one, because if we look over what's going to happen in a lot of utilities over the next 5-10 years, is bills are going to go up. We need there's a huge amount of investment that we know is needed in our water industry. There's a lot of questions into why that investment hasn't come, but nevertheless, there's a huge amount of investment that is needed, and invariably that means, and inevitably, a lot of that's going to fall on bills, and bills are going to go up. We have a path that we need to tread to net zero, which is going to require a huge amount of investment within energy, and inevitably a lot of those costs are going to fall on consumers, and the government, any government, wants that investment to happen. So they want the investment to happen. They know that's going to lead to bills going up. So grasp the nettle, bills are going to go up, but what we need to do is shield the people on the lowest incomes from the fact that those bills going to go up are going to make those services unaffordable for them. So something like a social tariff, something which looks at those cross subsidies, that makes bills more progressive, I think politically potentially unlocks or cuts the kind of Gordian knot between the fact that we need investment and governments want to see the investment being put in, but they would love to see bills being kept low. Well, you just can't have them both unless all this investment is going to come from taxpayer money, and we know that's not going to happen either. So the only equitable way forward is to have some form of cross-subsidization that sits within the fact that those bills are going to be going up. And that's a social tariff. That's the only real game in town to make that happen. So I think politically, actually, shielding the people on the lowest incomes who will be most impacted by the fact that bills are inevitably going to go up, feels the right way forward to address that problem. So I think it's a grasp the nettle moment that governments are going to kind of have to get on with there. And the point on data sharing, I think, is entirely right. I think it's very easy for people to recommend, let's just look at HMRC data and let's unlock that. But the reality is that data is a mess, and there's a lot of work that's needed to be done to tidy that up. It was good to see in the last budget the Chancellor talking about doing that, actually saying that out loud and putting 2026 as a deadline for doing it. That needs doing. There will be people, your old civil service colleagues for Matt, I think, will have to solve that problem. But it's a difficult problem to solve, but it's one that has to be done. And I suppose the last potential barriers, we've talked about legislation, and like legislation is, in a way, it's the stick that's there behind the carrot of actually improving some of these issues. But I think for some of the problems that sit around social tariffs, it might be that legislation feels inevitable. There is a need for risk sharing. Like Rory, I think you pointed out, water companies need to share some of the costs between them because of the geographical distribution of poverty. That feels like it needs legislation to make it happen. And I think unless you have that risk sharing, which we have in the warm homes discount, we have that. And note that the energy companies aren't here saying, let's axe the warm homes discount. There's relative degree of support for that because there is no disincentive for anybody taking on a customer who needs the warm homes discount. Well, in a way, we need that same setup in water. We need it in financial services. We need it in broadband. And the way to get at that is risk sharing. And to create some kind of pooled pot which funds some of these social tariffs. It feels, I'm not a legal expert, but it feels that that's the kind of thing which might require legislation to push it forward. So that's potentially a barrier, but I think all of these are barriers which can be overcome.
Great, David. Thank you so much. Caroline, over to you for your last word.
Hey, sorry, another cat. When it comes to water, I am definitely more revolutionary. I don't think that water should be private. I think it's an essential thing that absolutely everyone needs. And I personally would kind of say nationalize water again. But I doubt that's very popular amongst, especially the people who own the water companies. In terms of like the community banking, it is good, although so many people do get turned away. But there is too much assumption of digital literacy, I think, amongst the general population. So that people can, everyone can shop on Amazon, but being able to actually navigate the different websites and looking at the different terms and conditions, I think that's a very big assumption, and it's a big assumption that everyone's online. In Edinburgh alone, it's like 10% of the population doesn't have internet access. So for me, for everything that goes forward, regardless of which area it's looking at, it needs to be an awareness of the fact that not everyone can find it and not everyone can understand it. And that's part of what needs to change. And if wanting to get more word out about community banks, for instance, as was mentioned, it needs to be advertised where people go, where people are, instead of just assuming that everyone will be able to find them online. Because as I said, if you do a search for, short-term loans, they're not even on the front page of Google. So how is that? And people don't often go past the first page. So how are you going to find these banks? So for me, that would be stop depending quite so much on the internet and expecting everyone to be able to find everything, and nationalize water.
Thank you, Caroline. Let's turn to Martin.
Should be quicker on my unmute button, shouldn't I? There was quite a few questions there and quite a few comments already. I guess in follow-up to one point which Dave mentioned, that around grasping the nettle around cross-subsidisation, I think it's actually like grasping the red-hot poker, because everybody's been dodging this for I don't know how long. When it comes to the poverty premium, almost every single issue comes down to cross-subsidisation as being the answer, either from taxpayers or within markets from richer consumers to poorer consumers. But I throw back to people, if it's an essential service, there's a reason why it's called essential service. It's because everybody needs it. And if we've made a decision that actually we want the market to provide it, fine. But we have to have the checks and balances to make that work. So, and it's always the most difficult one when having conversations with the decision makers, because it's the one always where the regulator will say, oh, cross-subsidisation, go to the government, and then the government will always say, oh, it's really difficult, and could get to taxpayers, go back to the regulator. But these are just the types of decisions I want to see being made at the new Financial Inclusion Strategy Committee, minister-led, and wider for the other markets too, because we can't get away from the fact. And people keep saying, "Oh, what the market can innovate, that will solve things." We have to remember at the end of the day, some people are just not that profitable. They're just not that profitable. And it's trying to get, squeezing blood out of a stone. Some people will be more costly to serve. And if it's an essential, we need to have that debate. So just following on really there from what Dave said. Also, I agree with Caroline in terms of signposting there, in terms of affordable credit. It's meeting people where they're at. I don't know, housing associations, those trusted intermediaries. But at the same time, though, we've really got to grow the capital for affordable lending in this country. I think it was Lloyds recently who put some money behind CDFIs and credit unions. We need other major lenders putting some money into the sector too. And I think there's something here again, perhaps again in the terms of the financial inclusion strategy, about saying to big major banks, look, how are you funding at the moment? Are you doing a fair share of funding to all types of people who need money, including people on low incomes? If yes, fine. If not, pop some money into a central pot. So, pulling on ideas now from the Community Investment Act in the US. Finally, I'll just say a point about data sharing. It's not beyond the wit of any of us. If we really wanted to do it, we could have better data sharing between government departments. There is some data sharing at the moment with DWP. What we need is HMRC data sharing, live information about people's incomes, so that we can really make sure that they are opted into the right tariffs. And another area I think which would really improve in the meantime is embedding things like benefit calculators in people's everyday interaction with banks or when they're looking for money. That's embedded into that process so that while we're waiting for that sort of opt-out data sharing solution, we've got other ways where it's kind of interrupted in customer journeys as they go about their business. Thank you.
Brilliant, Martin. Thank you. And finally, we're going to turn to Ben to try and sweep up all of those questions and comments.
I'll have a go. So in terms of Matt's question around, affordable credit, we've obviously heard from Tulip around banking hubs and payroll savings, and I think they're both opportunities to expand access to affordable credit in different ways. So obviously banking hubs, we should be making sure that the local credit unions or major credit unions have a space within each banking hub, just as the major for-profit financial providers have. And with the payroll, the innovations around payroll saving and encouraging savings, that we should be directing as far as possible people to save with credit unions. So every credit union has the capital to lend out. In the report, we say that you should start with local government and public sector workers, because obviously they're the individuals who that can be easily supported to save with credit unions and alternative purpose-driven finance providers. And I absolutely agree with Caroline's point about digital literacy. I think, regulators, and perhaps by listening to consumers more effectively, would understand that point around digital literacy or lack of quite a substantial proportion of the population. In terms of main difficulties of the recommendation, I'm going to go slightly broader than social tariffs, because I agree with everyone's points on that. I think one of the big challenges, and it's a challenge I think the government always faces, is getting everyone facing the same way on a certain issue, getting all the departments and the regulators to actually A, consider this a priority, and B, to consider this a priority that needs to be tackled in the same way. So we already see that problem. For example, the FCA took action on price walking, or the increase to a certain products after you come out of contract, so the price goes up at the end of a contract. Ofcom said they're not going to do that for broadband and other and mobile services. So you've got two regulators effectively dealing with a very similar product, taking completely different stances on it. And I think that's the role why, you know, a cabinet committee can sound quite boring. And it is quite techy, but making sure everyone's facing the same way and wanting to tackle it is one of the main barriers, but also the biggest opportunity. And also on that sort of data share, and I'm going to steal a point that, Martin, you've told me many a time, is that obviously when we look at issues specifically to do with protected characteristics, so the ethnicity, premium, or disability, that is the responsibility technically of the Equality and Human Rights Committee, but they can't access the data that other regulators have, say on the ethnicity, penalty, and financial services, which is the role of the FCA, but the FCA is unwilling or unable to share that data at the moment with the EHRC. So that's why we've suggested around, you know, better data sharing, of course, but also about giving everyone similar powers and responsibilities to enforce the Equality Act. So they every regulator starts considering these actions. On these, the sort of very little point about EPC rating, it would be remiss of me to say that we've just started a project on tackling non-decent homes. That's coming out in quite a few months, but will no doubt that project will be tackling that. So I need to read up on that question before I give you a decent answer, Rory. And then just finally, because I don't think we've had a question on the final set of recommendations, which is reforming regulators. It's come up in the sort of the answers, but I think, and it comes to what I think David said, regulators and government have got a series of very, very difficult decisions that they need to take over the next decade to deal with major challenges that, you know, we're all very familiar with. And, you know, the stuff about social tariffs is absolutely right. But I think there's also a question of legitimacy about bill increases. And I think that if the government and regulators can show that they've consulted with consumers, they've considered the viewpoints of consumers, and that they've done their best as far as reasonably as possible to balance both interests in terms of the need for greater investment versus, you know, keeping costs as low as possible. I think the public will they're a decent sort of people, are the British public, and they will accept it. They may grumble, but if you can show to them that these decisions have been made with their interests in mind and their voice considered, I think that's a really important step forward compared to what we have at the moment, which is effectively, and this is a bit harsh to say, but I'm going to say it anyway, government and regulators basically going, consumers will take it. You know, we'll make the decision. They've got to put up with that. I think bringing consumers into the conversation is an incredibly important part of the picture, and it's something that I would urge everyone to take away in their meetings with, you know, the civil service and regulators to really push for.
Ben, a very good point to close. I want to thank everyone for coming along this lunchtime. Thank you for your attention and interest. I'd like to thank all our fantastic panelists, including Tulip, who had to speak, had to leave early, but maybe actually taking some of these decisions forward herself in the coming months. And finally, I'd like to very, very much thank Fair by Design and Barry Cadbury, who have been fantastic partners on this whole project, on today's event, and in working with us on the research as well. So that's the end of the session. Enjoy the rest of your day.